Bob, let me start with you. You've got some experience not just with banks, but also with tech, and specifically fintech with your major deal involving Circle. So give me your sense. Typically, it's thought that tech gets beaten up with higher rates. Is that true now? Is this a time not to invest in tech?
Well, again, come back to higher rates, David. We're talking about just getting back to neutral. So we're talking about maybe a 10-year in the higher end of 1.5% to 3%, and rather than the lower end. And we're talking about 2% Fed funds rate. So no, I don't think there'll be a negative impact. Our investments, our last 3 or 4 investments in Atlas Merchant Capital have all had a very, very strong tech angle to them. We're very, very positive overall on the fintech sector. Stable coins in particular, as you know, we announced in Concord Acquisition Corp a merger with Circle. And I think payments, technology, stable coins, the ability to impact the costs of commercial services, the opportunity to increase economic stability, all these things we think are very, very positive. So there will be winners and losers. I think there were periods in the market where anything with a tech angle, whether it was fintech or outside of finance, had a good bid. And I think it's appropriate that there are a little bit more selective in terms of the platforms that will be most successful. But within financial services, the impact of technology and the impact of technology-focused platforms is significant, and we really like it as a broad area to invest.
And I think that the news out of JP Morgan this morning just really confirms that. They are spending because competition is up and they need to become more efficient. And where are they going to get that technology? Well, some of it will be internal. But if you go beyond the big money center banks, think of all the regional banks, community banks, they also need to become more efficient. And so a lot of the fintech names that are providing some of those capabilities, whether it's a smaller name like an Encino or a larger name, they got thrown out too over the last several months with all those multiples coming down. So, it's like the babies got thrown out with the bathwater over the last several months. And I think this year, we're going to see quality names really come back. So as Bob was saying, we're going to have to be really selective. But I think investors are going to start looking more carefully at the companies to see if they actually have customers, a well-defined market, and customers that have money to spend. And some of these companies have proved themselves already, and their multiples still got crushed. So I think there's a real opportunity for tech investing right now. You don't want to buy tech necessarily when it's really high. You want to buy it when the market is panicking and when the numbers have really come down, as they have over the last several months.
And Joanne, I would also say, you and I had talked about this, but there are sectors like using stable coins again, where we should really embrace and encourage clear regulation. And I think in the case of Circle, we certainly do embrace regulation. And I think that can also help separate platforms from those that are more investable than others.
And Joanne, I wonder if that takes us to another big story of the week, actually, was the nomination by President Biden of Sarah Bloom Raskin to be the vice chair of the Fed for supervision, because she worked when she was at Treasury. She worked specifically on regulation of crypto. I'm told she's one of the first people to say, we need to regulate this, and came up with a paper on it. So does that mean that we're going to have that regulation sooner rather than later, and maybe have it be informed?
Yeah, I think that's right. I mean, she has a stellar reputation. I think she's pretty highly respected, and she certainly has the experience in her various areas of work over the past many years to be able to think and lead discussions pretty well on that. But I think people, again, not separating which companies actually benefit from more concise, more thorough regulation and which ones might lose. You had the whole area trade down on the fear of more regulation, when actually it should be viewed as a positive for the development of products in that sector. And I think people probably misread that. So once again, going forward, I think we're going to get some clarity on the direction in which regulation is likely to go. And I think that could actually help some of the better companies.
Joanne, I couldn't agree more. I think there's a perception that, regulation is negative. Regulation's not negative. Good, sound regulation will make it more clear who are the winners and who are the losers, and which, can operate within a highly regulated financial services industry. My understanding is that the Fed white paper on stablecoins is coming out very soon, and I think that will add to some clarity around that as well.
So Bob, you've mentioned stablecoins a couple times, and really focus, if you would, on the payment companies, because you do have experience. You've got investments in the area. What will be the difference between the sheep and the goats, if I can put it that way? Because there are a lot of companies out there right now. Which ones will survive and flourish, and which ones will fall by the wayside?
So there are stablecoin companies, or companies that are platforms that expect to be, that would prefer to be offshore, that would prefer to be outside of the regulatory perimeter. And I think those will be very challenged in terms of becoming, really used as payments. And there are others like Circle, which has said they plan to apply with the OCC for a full reserve banking license. That's how much they would prefer to be within the regulatory perimeter of the U.S. financial system. So I think we'll see it with more clarity, David, going forward. But I think we can see it, and there's already a separation from those that would prefer to stay outside of the regulatory perimeter and those that would prefer to operate inside.
Joanne, I'm really curious, again, for you as a portfolio manager, we hear increasingly people say, even who are skeptical of cryptocurrency overall, that there is a role in your portfolio for some of it, for various reasons. Do you feel that way? Do you look to balance, to some extent, have some role for cryptocurrency, whether a stablecoin or a different sort?
Yeah, there can be a role for it. As Bob was saying, it's at this point a bit of the Wild West, right? Some are quality and they're really careful about adhering to what is likely to be regulatory frameworks that keep them safe, right, and create transparency. But we do create an opportunity for our clients to be involved in some of the cryptocurrencies. We like the ones that have a more grounded foundation in the underlying blockchain technology. But it's a bit hard right now to get too involved, because again, there's going to be a shakeout among those who are more careful about keeping those transparency, guardrails in place and keeping out some of the more nefarious activities that have been, used in those platforms, and also, the potential for hacking and other things. So one really has to be careful, but, it's clearly speculative, potentially a lot of upside, but also a riskier position. So one wants to limit exposure, I think, that realm at this point.
And listen, the impact on the economy can be real. If you look at, being able to do commercial payments, not consumer necessarily, but business to business, instantaneously, 24/7, on a weekend, in the middle of the night, at the speed of the internet, but also with the cost of those transactions being driven virtually to zero. This can have a significantly positive impact on the economy and on inclusion in the financial services.